Hi everyone, hope you're all doing well, and today we're going to talk about Callaway golf stock and why this stock is going to 2x and I think maybe even 3x. So yeah, I'll be breaking down the reason why I've been buying this company and why I'm bullish on this company today. So if you could smash the like button, and if you're new, subscribe. If you do want to know when I'm buying and selling companies, make sure you join the Patreon, link is in the description, and also if you want a free share, join the free trade link in the description as well. But we'll get on to Callaway Golf, or Eli. So I'll be honest with you, the main reason I am buying this company is because they have recently acquired Topgolf, and we'll be mentioning that a lot today. Basically, Topgolf is the Hollywood Bowl of golf. Callaway Golf as a business is okay. I wouldn't have bought the company without the Topgolf merger. I think unless it had like a crazy drop and it dropped 50% or something, maybe then, it does have amazing brands. But I think this them acquiring Topgolf is the massive game changer here, and I think Wall Street is sleeping on that. And yeah, we'll be mentioning why I think Topgolf is so good in a little bit as well. But basically, Topgolf, obviously you got Callaway Golf, which does the golf clubs. It's also gone into clothing a little bit now as well, but I think the catalyst of getting the Topgolf now will give them an entertainment side and link them all together. But I don't want to talk about that too much because that's what's going to come up later on in the video. And yeah, when I kind of put that bull case towards you, you might see why in the next 2 to 5 years I think this stock will at least 2x, maybe 3x, and go, I think, at least to $60 in the next few years overall. So yeah, we'll be talking about everything like that. I am going to say that, as well as the Topgolf being the big key part of this video, I also think one thing that people are forgetting is I think there's going to be a massive CV recovery from the CV situation that we have had in the next few months. And I think golf will really benefit from that. As well, it's already been benefit from being one of the things you are allowed to go play. But I think the Topgolf side of the business will really benefit from that, and people will be very eager to get out. They will want to go see their friends. They will probably want to go play golf, as well as maybe, we'll go watch some sporting events, which you could watch at the Topgolf. Maybe you can go meet friends. Once again, Topgolf will do that, and I think Callaway will have a good grip on the recovery side of it. A little funny thing is that currently in England, we are now allowed to go play sport again. So I actually went to go play football on Monday, and it was at a venue which basically has like loads of like artificial pitches. I would say the venue has like 25 artificial pitches. So I went down normal time where we normally go play, and the car park was absolutely heaving. Literally, the car park there was full up. They have an overfull like car park, and that was full up. And then outside there's like a street which you're not supposed to park on because it gets quite congested. And it was everyone's parked up and down the street, which then caused, another story. It caused major problems for the traffic. But anyway, that's nothing to do with the point. But what I'm going to say is, like, that was the first day, and back out, and I've never seen a leisure facility just absolutely heaving like that. The amount of the amount of parking that were going on, everyone was just so eager to get back out and go play. And I think that's very similar for like golf as well, because as well as that, there's actually a golf venue just next to it. And the queue to actually get on the golf course, people queuing to get onto the golf course, and that was heaving as well. And it just shows you, like, I think people are just so desperate to get out that when they're going to be allowed to get out, people are literally going to be going out so much. And I think, golf, and as what I've seen myself, is one of the things that should benefit. And I think Topgolf, their venues as well, will benefit as well. So yeah, I think that these guys will have a big demand as well in the next few months, which I think people are missing as well. So that's my little story for today anyway. And what we'll do now is we'll go take a look at Topgolf. So while I do this stock review, I'm going to do a screen recording again. Hope that's okay. Not that you have a choice anyway, but yeah, it just saves me from doing so much editing. But I think as well, you guys, it's a bit more interaction rather than just looking at still images. We have a bit more moving images as well. So yeah, hopefully that's all okay once again. But here we go. Callaway Golf, ticker symbol Eli. So currently at $26 today. Is having a little jump in after hours right now for recording this video. But yeah, I think $26 is a decent price for this. I do like Callaway below $26. Now, I actually started buying this stock somewhere around about here, $22. But this was just one of those stocks that just got caught up and kept going up and up and up. And basically, I only bought a little position in Callaway, and I never bought it that much since when I started buying my shares, and I was up like 40%. And there was a part of me thinking, well, if I can't average in, I might just shift these shares up off. But since then, it has had a little bit of a dip, and it has come down 14%. And while it's on this dip, I've started buying back into this company because at $26, I think it's okay. I would love to buy more at $22, but at $26, I still think it's not a too bad of an opportunity. I thought this at $30 is a bit too much, but here, I think it's pretty good. You know, I would like it a little bit lower, but I'm still quite happy where it is right now. So that's where I started buying. Obviously, it went up a bit too much in the crazy market we've had, but lucky, you know, we are having a bit of a pullback as well. And the other thing I want to say as well, I think Callaway is a good one for my portfolio because it just gives me a bit more of a diverse portfolio. You know, I know it's one of those common things, but people say, you know, don't have too much tech. And I always a little bit on the fence with that one because I'm always thinking, well, you know, most of the great companies nowadays have tech in. You know, it's just part of life. You know, got Uber, taxi service, but is it a tech stock because you have an app? Peloton, a fitness bike, but it's got an online screen class, or the screen with the class is on. So is it a tech fitness company? Is it a tech company? I mean, it's just such a grey area. I kind of think like, I never get caught up too much on it because I feel like, you know, most successful companies have to have some sort of tech in. But yeah, I think Callaway is for sure a very diverse leisure company in a stock market portfolio. And when I look at my US portfolio, I don't really have many leisure companies in there. So yeah, I think it's a good addition. And like I say, I think what I said previously as well, I think the Topgolf side of it will be amazing, but I think they'll also have a bit of a boom in the next 12 months as well because of the recovery from the CV situation. So yeah, that's it on the stock chart point of view. So what I'll do is I will just go through the recent earnings for Callaway Golf, which once again, like I want to make really clear, the Callaway Golf business is decent. You know, there's still good growth in here. They still have major brands and they're still very dominant in the golf industry. But there's a solid company there. But as well as that, we also get the amazing Topgolf business. But I just want to make, you know, show as well that the Callaway Golf business is still, you know, quite a good business. So this was the Q4 for Callaway, which was still pretty decent to be fair. So we'll try pick out some of the most important slides on this one here. So we'll go with this one first. Announced transformation merger with Topgolf. So yeah, that was what was announced, and since then it's all been confirmed because you see here it says Topgolf merger shareholder vote. The vote passed and the merger is happening, so that's all great here. The golf equipment segment continued its strong momentum in Q4. So actually the golf equipment sales this year, you know, it's a great brand and the golf equipment sales were actually really strong. The big thing that kind of killed Callaway this year was the complete slowdown in Q2, which was the main cause for like losses this year, and also revenue not growing a huge amount. But the actual other quarters, especially Q3 and Q4 on golf equipment, was really strong because at the moment, golf is one of the things that, because it's outside, is still getting allowed quite a lot in a lot of countries. So the equipment side's actually been pretty strong side of it. And you'll see here, the one thing that's killed them is the apparel side of it because they haven't had people coming into like the clubhouse as much and, you know, high street shopping and stuff, because the golf equipment side has been amazing. The apparel side will come back, and then you add Topgolf and on top. And I think this is a great thing with this company. You know, this is all now going to link up with, you've got golf equipment, apparel, clothing, and then you also have you know, what's the thing you could add in here? An entertainment side to attract non-golfers, and then also sell your golf equipment at the entertainment side of the company that you've now acquired. And I think this is just going to give Callaway just an amazing edge in the next few years. I think it's going to be unrivaled in this industry. I think they're going to be the masters of not only the golf industry, you know, the next step up to be entertainment kings in the leisure industry as well, which is crazy. And you can see some of the brands here. You know, we'll talk about the balance sheet in a little bit, but the reason why these guys don't have an amazing balance sheet is because they do like to acquire brands. And you can see here, you know, some of the golf equipment brands that they do have. Also, some of the apparel brands that they've signed. I mean, this Jack Wolfskin, I didn't even realise until I actually looked into the company that Callaway owned them. And they actually paid quite a bit for them, and that's the reason why the balance sheet is probably the only red flag on this company. But the reason why it is a bit heavy on the debt side of it is because they are very aggressive on buying out companies, which I can't complain them too much because I think they're very good purchases and will help the growth going forward. So yeah, that was some of the highlights. This is where it goes on about the golf segment, and you can see how well the golf segment really did. US retail sales of golf equipment are up 59%. Rounds played, because like I said, the US, a lot of the golf was still allowed, where it was partly stopped here in the UK. A lot of US golfing still was allowed, and more people were taking it up, and there were really good numbers on the golf side of it. But globally, you can see how well they were doing as well. This is what I mean. You got Callaway, such a great brand as well. Strong tour, number one driver, number one putter as well. So everything was pretty good on that side of it. The Topgolf update here, you can see that there wasn't much details given out here, because at the time the Topgolf merger didn't happen. But yeah, you can see just the only 3 venues were shut. But despite closures, Topgolf's Q4 results were exceeded expectations. 3 centres closed, but opened 2 new domestic venues already this year, and are on track to hit plan of 8 new owned venues this year as well. Dubai, so they're expanding the international market, opened this earlier as well to strong reviews, which is pretty good. So you can see, like, at the moment, we'll talk about this a little bit, but the international side of it is something that will massively grow in this company as well going forward. Now, on here, you can see the Q4 side of it. On the company side of it, still growing at a decent rate. Was growing at 17% net sales. Now, if we go down here, you can see it was a 7% drop. But like I said, Q2 kind of killed this company off. But if we do look at what was going on when they were kind of nearly back open, still really strong sales from that point of view. And if we just flick across to Simple Wall Street, and we just flick through the numbers, and I will pop back to this later in a little bit when I just show you the Topgolf numbers. So 5.1 billion market cap company. I'm just going to show you the earnings revenue on Simple Wall Street. So you can see here, you can see the jump, what's going to happen when the Topgolf merger starts coming into play. But you can see here, the company's historically, grown revenue at an okay rate, but it's going to jump here from a 1.7 billion revenue company to 2.7 billion to 2022. It's nearly going to double revenue in the next few years, which is going to be absolutely insane. And then what will happen as well when the Topgolf merger happens, it will help revenue grow at about a 10% rate. I'm going to say, and I'm going to come back to this in a little bit, I think the earnings side of it is totally wrong. I think that this year will actually be at least break even and maybe even profitable for Eli or Callaway. And I think these numbers as well are wrong. I think like the profit could be double what is being shown on here. So yeah, that's something I'm going to say. But you can see here, historically, the Callaway business has been a good revenue growth. And you can see here, the revenue is going to, already double and grow at a decent rate. And I think profit-wise, that will come back a lot stronger. But we'll come back to that a little bit later. Now, like I said, the only one red flag that I did have with this company was the balance sheet. You can see here, it has got a little bit ugly. Obviously, this is to do with the CV situation, but obviously they've been acquiring a lot of companies, but still, it's not horrible. Like, I like the purchases that they have done, and I don't blame them, because that will really help the growth in the long term. But the debt is 700 million, cash 360 million. So I still think cash to debt is, not the worst, and I think it's not a terrible balance sheet. It could be better for sure, but I think what they've done, why they've taken that debt on, justifies the companies that they bought justify taking that debt on, if you know what I mean. So yeah, I'm not going to hold too many grudges with that one. Now, the bit we've all been waiting for, wasted 10 minutes going through that part of the business, but I think obviously you got it's still going to be 50% of the company, but the bit we've all been waiting for, Topgolf, the big purchase that they have done. So Topgolf, if you don't know, mostly based in the US, but going to expand venues worldwide. You can see I'm already getting excited because I'm moving around. But you look at the venues are absolutely amazing. And they look like places you want to go. And you can see here the booths that you would rent if you wanted to use it. But as well as that, there's the golf side of it when you actually go play to these the driving ranges. But as well as that, There's also the entertainment side of it. So sometimes they host events here, as well as that they have like the sports bar. So you might go meet friends there and watch a game there. You might also go for food there, and that's what I mean. Like it's. I think it's the next step up for Callaway. You know, Callaway previously was just golfers, and you're just selling golf equipment. But what's the next step up for Callaway? Entertainment. Having a company that now attracts non-golfers, that also has multiple income streams. You know, not just you know, having golf equipment, not just having apparel, but having entertainment, driving range. Don't get me wrong, but as well as the driving range, events, you know, food and beverages. I think this is just a massive step up. I think this is the like I said, the golf version of Hollywood Bowl, for my opinion. I think the venues are absolutely amazing. So we'll just get across. Oh, I'm going to say this as well. One thing that really stood out, because the one thing that attracts me into this company is that the actual, at the actual time, I thought Topgolf was going to IPO, and I was very tempted to buy Topgolf when it IPO'd. And you can see here, it was rumoured to get IPO'd at 4 billion. And then that's when I heard that Callaway Golf actually bought it for 2.6 billion in stock, and I was like, whoa, that is such a good purchase for Callaway. Like, they'll just link up so well with the golf side of it and equipment sales side of it. I thought the brands just work absolutely perfect. And as well as that, you look at that, 2.6 billion in stock, and they're going to IPO at 4 billion. I was like, well, for me, that was just like, well played, Callaway. That was, you know, such a great move. And that was the first thing that got me onto this company, actually. But what we'll do is we'll actually go through the actual investor presentation for Callaway and Topgolf's merger. Now, this is about 4 months old, so do take that into consideration. But I think there was some good information about how good of an actual company and merger this will be for Callaway. So what we'll do is we'll just go through some of the numbers here. So you can see here, 3.2 billion in revenue, 260 million in adjusted EBITDA. Now, like I say, if we just flick back here and we go back to this side of it, I think revenue has been sandbagged a bit here. I think that EBITDA is going to be sandbagged a bit here, and I think when you consider that the stock is only, I think pre-pandemic the stock was, let's actually have a look together rather than me making numbers up. So pre-pandemic, the stock was $21. It's now $26. Like, that's, you know, 25. The stock's gone up 25%, and now it's just added Topgolf into it. And what Topgolf's going to do is, from pre-pandemic, is going to go from 1.7 billion in revenue to 3.3 billion, and the revenue is going to double, and the share price has only gone up 30%. As well as that, I think earnings will double because of the Topgolf merger. And this is what I'm saying, you know, I don't think Wall Street have priced in the merger at all, because you've got a company that is instantly going to double revenue, instantly, and earnings should double, and that's in a year's time. You add in the fact when Topgolf start opening up more and more venues, and revenue keeps on increasing at 10% a year, and the profit from them venues keep going up and up and up, because they're amazing venues. Wall Street is totally sleeping on this. You know, this is why I think the stock deserves to trade at such a high valuation in the next few years, and that's just the beginning for what's going on. But getting back onto it, so you know, once again, you know, that link up between Callaway golf equipment, and also having the entertainment side of it, absolutely perfect combination. 3.2 billion in 2022 estimated revenue, 360 million adjusted EBITDA. Which should be good. And you can see here the long-term plan. Look at the jump there. You can see here they're looking to grow 10% revenue, and in for EBITDA of mid to high teen range here, which should be pretty good. Now, this is what I mean by what's the next step up for Callaway. You know, rather than just applying to golfers, this is how it's all going to link up. So you got, you know, elite. You're now going to have Callaway that will sell to, you know, the elite professionals, which you already do. You know, number one driver, great brand, number one pro. And then you have now avid amateurs. So you can see here, you're going to start applying to this market here, and new and aspiring. So you can see 51% of Topgolf guests identify non-golfers. So you now, you know, half of your audience that's now coming in is audience that would never have interacted with your brands previously, and this is the new reach that Callaway will have with here. So yeah, I think that's absolutely crazy. And once again, beginning and returning golfers up 20% as well. And then 75% of non-golfers who visited Topgolf say they're now interested in playing on a course. So I think it all just ties in absolutely amazing with each other. Now, if we go on to the venues, you can see it, Topgolf's still really early stages. The ramp up they're going to have in the next 10 years, 23 million venue visits in 2019, but only 58 US venues in three formats. So they do three different formats to have either large venues, medium venues, or small venues. But you look, there's still a lot that can happen in the United States. And the crazy thing, the international market is still untouched. There's some in the UK, some in Australia. Obviously, we know about the Dubai one opening up, but look at, there's so much growth in Europe that can still be had. This is still early stages, and, these will get ramped up as the years go on. And I think as well, you look here, and even in the pandemic, 100% of US venues have fully reopened and operating at 80 to 85% of 2019 same venue sales. And I think that's pretty impressive, when we get back to normality, the vaccine rollout happens, they're still pulling in that sort of, venue sales in the middle of a pandemic. I think it's pretty impressive sales. So I think you can see here, there's still the demand people going to Topgolf, and there's still a lot of growth to be had with it as well. And you can see here, this is the amount of revenue that comes in for a venue in Topgolf. So you get your normal, gameplay here, makes up the most chunk, but food and beverages, if 2 years ago, or even 12 months ago, Eli wasn't in the food and beverage sector, and now it's opened up there. You've got events, they'll come back, makes up a massive chunk as well, and other as well. So yeah, and this is the growth opportunity. You can see here, identified opportunity for 200 venues domestically, identified opportunity for 250 venues internationally. So this will grow huge over the next few years when you think they've only got 50 venues at the moment. 10 new US venues per year starting in 2022, 3,300 constructions or letter of intent, and 2% of the international addressable market penetrated. Yeah, so you can see there's just crazy growth, we're going to have. And the last one I'm going to leave you with here is Topgolf as a business. You can see here the historic revenue growth, 30% year over year, great growth. Also, one thing not mentioned, they actually have Top Tracer, which is growing at 233%, which is amazing as well. So yeah, really, really good. So once again, if I was to put my bull case on why I think it's, and you're still not sold on why this is going to go up in the next few years, I mean, just look at what Topgolf's going to do for this company. It's just the next step up from it just being a golfing company to now a golfing and entertainment company. Look at the revenue growth. The revenue growth is going to double next year, and even beyond that, growing at 10% rate will be huge for this company. And yeah, I think in the next 12 months maybe we'll have double the revenue of 2019, and I think in the next kind of 36 to 48 months we'll have a company that's tripled that revenue what it was doing in 2019. And let's not even forget, I think the venues are going to be absolutely profit beasts as well. So yeah, I think overall, I think this company's, the Topgolf is a game changer, and I think they'll be very popular as they already have been as well. It's already was a company growing at 30% revenue. A lot of demand in the CV situation as well, and yeah, I'm a massive fan of this one. So hopefully you can see my point of view on this one. But yeah, let me know if you're buying shares in Eli or Callaway Golf. I'll be really interested to know if you are a shareholder as well. But I hope you enjoyed the video anyway, guys. I've already kept you for a long time anyway. So anyway, I hope it was useful, and I'll catch you all in a bit.